everyone, welcome back to my channel. This is Kat. In my last video about personal finance, I shared with you a few tips about how to save money and start thinking about saving, have a routine, plan to save certain amount every month, and you know that time is your best friend. The younger you are, the less to save to achieve $1 million. So in this video, I want to share with you what kind of account should you put your money into after you save some money, right? You need somewhere to put your money. So I hope you will enjoy this video. Please thumb up if you like this video and let's get started. So first, simple and straightforward checking account. If you go to any banks, you want to open a bank account, right? It is a checking account. Most banks won't charge you a monthly fee for a checking account if you either have a minimum balance of certain amount of money, which is relatively low, or have a regular deposit into the checking account. Both are typically relatively low, so it is a great way to start your bank account. To open the bank account, you typically have to stay at that region for a certain amount of time, some bills, and your ID. It shouldn't be that hard if you're a graduate student, that you have your proof of income. That should be very easy to open a checking account. The good thing about checking account is, as I mentioned first, it requires very minimal, account balance that most of us can achieve. There are several good things about checking accounts. First, as I mentioned, it requires a very low minimum for the account balance, so most of us can achieve. And second, it is very convenient to take money in or out from the account. And third, it is typically the account that you transfer money to other people, with Venmo, with PayPal, all these other apps. It is just very easy to connect with. The bad thing about the checking account is it is not quite safe. Also, basically, you are losing money by putting your money in your checking account if you count inflation, and annual inflation in the United States now is about 2%. But the interest rate in your checking account is 0.01 or whatever. Basically, it's nothing. Okay, so if you keep your money in your checking account, you typically use it to pay for a credit card, to pay for other things. Not a really long-term investment place, okay? But it's definitely a good place to start putting your money. When you start thinking about saving money, you start from there, okay? And the second account I would say is your saving account. So there are some, arguments I would say about if you should open a saving account, because some people think it is not really necessary. So to me, I have a saving account because I put my emergency fund in the saving account. The good thing about saving account is it is much more secure than checking account. So it is harder to be hacked because you put your checking account everywhere while your saving account is more protected. So, I put my emergency fund there. Well, of course, there are some drawbacks about the saving account. First, the minimum balance of the account is much higher than checking accounts. And if you want to upgrade any accounts, those minimum balance also increase accordingly. And second, even though it's called savings accounts, the interest rate is still very low. You just ignore it, okay? So don't think about using your saving account to make money. That's why I only put my emergency fund there. So now, if you are thinking beyond saving account, that means you're saving a lot already. Congratulations. Then, now you should think about your retirement account, okay? That would be immediately the next step after you save enough for emergency fund. Well, speak of emergency fund, it is really important, especially, after the financial crisis in 2008 and also the COVID, just happened and we're still in the COVID era. Having an emergency fund is just really critical, especially in the past year. Many of my friends got laid off. For the people who have the emergency funds, they can live off from their emergency funds and then trying to get the next job. So typically the rule of thumb of emergency funds should be about 6 months of your expenses. So for example, now let's say your monthly income is $5,000. So you should save 6 times $5,000 in your emergency fund, which is 30,000. So that should help you transition to the next position if anything happens. And then after you saved all your emergency funds, then you should start thinking about your retirement account. Okay, so I'm talking about just the United States. So before thinking about that, you have to make sure that you wanna stay in the United States for at least long term, right? Because you cannot take the money out from your retirement account before the age of 65. That means if you wanna take it out before that, you get penalty fees. Let's say you wanna at least now thinking about staying in the United States, and you wanna take advantage of the retirement account, then let me introduce you with several different things, okay? So you should think about retirement accounts before the investment account is because retirement accounts are tax exempt or tax deferred. So basically it has certain benefits from tax. And tax is a big thing, right? Imagine, let's say you earn $100,000 and you're paying 30% of tax, then you only get $70,000 in your hand, right? So it's very different pre-tax and post-tax. So you definitely have to think about tax. So for the investment accounts, you pay a lot of tax for your capital gains. But it's a different story for the retirement account. Because of the tax benefits, I always recommend the retirement account first. And if you can max out your retirement account, that's really good already. And remember, take advantage of the time. You can achieve financial freedom really quickly. And remember the time concept that I give to you. If you start your retirement account when you are 20 or 25, you should hit your $1 million much earlier than 65, right? So speaking of the retirement accounts, there are so many different types as well, right? The most popular ones is the traditional IRA, Roth Ira, and the 401k. So you can open any of these accounts in any of the platforms now. So for example, I use Vanguard, my friends use Fidelity. So there are a couple different those kind of financial institutes out there that you can use to open your retirement accounts. Within the IRA, there's the traditional IRA and Roth IRA, as I mentioned. So Roth IRA is a relatively new concept. Key difference is basically the traditional IRA, you put your money in first and you pay tax afterwards. But with the Roth IRA, you pay tax first and then later on, you just take your money out no matter how much money that you make. So that is, I would say, the key difference. For the 401k, that's typically something that the employer offers. So for example, I know for a lot of postdocs, it could be 401k or 403b. So that's a little bit different, but in general, those accounts, basically the employers provide for you to save. So you can take certain percentage of your income and put into those retirement accounts before giving out the personal income tax. So I always recommend people putting the money into the retirement account first is because this will reduce your personal income tax. So let me give you an example. Let's say you earn $100,000. It's just easier for the math. That's why I use $100,000, which, I know not everybody earns six figures. It's quite high, right? So if you're earning $100,000 and you put 6% of your income first into your 401k, and then you put others in your Roth IRA, right? And then it is the rest of your income calculates the tax that you should pay. So that really will lower your tax. That is something that you should do after saving your emergency fund. Really remember after saving your emergency funds, okay? Because emergency funds, it is in the saving account. You can take it out anytime. That's why it calls emergency funds. You don't want, without any savings and you put everything into retirement accounts. That doesn't work in that way because if you want to take it out earlier in an emergency, you pay penalty fee. So you want to really avoid that, okay? Okay, then let's say really the best scenario, you saved your emergency fund for 6 months, the 6 months you can adjust it based on you think how much money that you need. You can do 6 to 8 months, okay? Save up your emergency funds, do your retirement account, and then you have extra money. What you should do, you should do an investment account. There are so many new platforms nowadays, since COVID, you know, Robinhood, Weibo, there's just so many of them. I feel since pandemic happens, so many of us are retail traders. You just do it by yourself. So I think that can totally happen, you know, even you're just a newbie, use Robinhood, use Weibo, you know, all these apps makes now trading so much easier. You can pick your favorite stocks, you know, let's say you like Tesla, you like GE, you like, you know, Apple, you buy all these stocks by yourself and then they don't really have fees. You can just play around with it. And alternatively, you can buy index funds. So you can buy SP 500 and those will be, I would say, over 30 years average will be 8 to 10% return. That'll be really good. So based on your age, you also want to have a mix of index funds, mutual funds, stocks, bonds. People do gold and now, you know, all this cryptocurrency that you can buy. That's really up to you, okay? I'm not a finance person. I only offer advice of saving your money and invest, okay? And if you know, let's say you're more conservative, you don't feel comfortable about investing your money into the stock market, what you can do is do bonds, okay? Bonds are really safe. I tried one back then. It offers you, I think, 3% annual return, which is good enough, much better than the bank, right? So there are just so many other ways for you to invest your money. And really remember that money should work for you. You should not work for money, you know, all the time, right? Now we're working to get paycheck, we're working for the money. But when you have enough money to invest, you should let the money work for you. And that's always my philosophy. So this is really a very big general introduction to the accounts that you can have. And I hope that really try to save first and then start doing some smart investments, retire comfortably. You know, that will really relieve your stress about the money issues. I hope this video helped you to understand better about the saving accounts, retirement accounts, and investment accounts. Let me know if you have any questions, and thank you so much for watching. Please don't forget to like my videos, subscribe to my channel, and I will see you next time.